Hey everyone, welcome back to CryptoCache. Thanks again so much for joining me here. I hope you're having a phenomenal day. Happy Friday to you. I hope it's a happy Friday for you. Obviously, if you've been taking some longs, you'll be learning a pretty swift lesson here today. Most altcoins are down 5 to 10%. It's not a good market to take long. I've been pretty much saying that for the last week straight. So again, if you've been watching my channel, congrats to you. Quick congrats to our community members here as well. BNB profit 26%, Solana 42%, 43 from AVAX. ICP 36 and the second ICP trade at 39. So it's been a nice profitable week for us here, of course, with all of our shorts that we have. I wish I had been able to short a little bit more. It's okay. That's the case. You don't got to get too crazy with trades. It's been a weird week. Okay. We did miss our short opportunity here at about 66,000, just wicked up to about 65.7. As per usual, majority of the week we've been missing out on a lot of shorts and just kind of par for the course, right? You can't force a trade, you don't want to, but in the same accord, if you're going to force anything, force a short, you're going to have more luck, more success. So let's take a look here at the back end data and kind of see what's going on, okay? Because when we look at liquidation, we're not like in this super liquidation area. Like there's not a lot at this level because most of it has been swept. So the price is just kind of going anywhere it wants. You do also got to recognize too that we've had the worst day in the traditional markets with almost $3 trillion in indices effectively going down because there's a lot of fear in the market right now. So if you do take a quick look here at traditional markets, you can see NASDAQ gap down pretty solid here, and we're down on the market, and it's just not a good setting for a lot of coins, specifically in the altcoin market, but traditional markets as well. Okay, so just recognize that's the thing. If we do take a look at the macro here as well, just for liquidation, not much has changed, but we're getting a lot more liquidation levels at 62,000. In other words, we got these late longs here effectively taking longs at this point, which I've been mentioning for a while is kind of unsafe for the moment. I would not recommend that. In fact, let's refresh this here. This might be a couple of minutes old because we do see the price action came all the way down as low as 62,000. There we go. That looks a little more accurate. So again, we retested this lower level. A lot of liquidation here still between 60 and 62,000. Keep in mind, each one of these bars here is worth about $7 to $8 billion. Okay, that's a lot of liquidation just below the price. So do not get it twisted here. Just because the price recovered here for the moment does not mean it can't still go down. I firmly believe it will. I was planning to short 66,000. Price came up just shy of that. As per usual, you see this untriggered event here. So that's just how it goes, folks. Let's take a look at the daily time frame, see what's going on. Work our way down. So when we look at the daily, we want to recognize a few key factors here. As per usual, nothing really too different. Again, we got this head and shoulders pattern forming, likely to have found our shoulder here. We'll go ahead and clarify that later. But what I'm getting at here is that we had this bearish backtest of the ascending trend line, right? The 20-day SMA just got retested and effectively rejected. Okay, so that's really common for that to happen when you break bearish. We also want to recognize too that the 20-day SMA, it's the 50-day SMA here at about 63,000 is the last line of defense. Actually, no, correction, I misspoke. The 200-day SMA is the last line of defense, but the truth is SMAs should never be used as like a support level. They're just kind of ranges that, when you're on one side or the other, you kind of just have to have a slight mentality shift, right? Now that we're under the 20, it's implied that we're going to probably see further downtime or downtrend to potentially retest the 50, which is basically where we're at. So they're kind of like little lists that you can check off effectively and kind of see where you're at. So either way you look at it, we lost 100-day SMA. Nothing is looking good here. We're now officially under 50 on the RSI, breaking bearish. If you look at the last time we broke under 50 on the RSI, it took us, from June 11th until July 14th to recover. Now again, the price action did some of this when we were still under 50 on the RSI, so it's not to say you can't still have good days when you're under that resistance, but for the most part, you're going to see stuff like this when you break below 50. That's the difference, okay? So I'm expecting, I think 60,000 is a realistic scenario there, because once again, we do have a CME gap here as low as 58.5, upwards of 61, okay? So I think it's a distinct probability it's going to happen, just a matter of when, almost at this point. The fact that we're this close and there's that much liquidation at that level, come on, how else can it not happen, right? Anyways, MACD's diverging, stochastics swinging down as well, money flow index pulling back. These are all signs letting us know that there is not a lot of buying pressure. In fact, I mentioned yesterday in our analysis last night, that little pump up to 65,500, it just seemed very false. It was very low volume and it didn't have a lot of substance, okay? So again, you kind of see this here. This amount of volume was too low to be able to have a nice little increase and sustainability, if you will, right? So again, a lot of little signs have been on the writings on the wall. Signs have been there. MACD is diverging once again. We got an MACD FU on the 4-hour. Basically, just as soon as it goes to converge, it just swings back down. And truthfully, my trading bots, for example, most of them got stopped out for their stop loss because there was a lot of bullish qualities on the charts as far as moving averages are concerned on smaller time frames. So there's a lot of false positives, and then the market just instantly dumps. Keep in mind, fundamental catalyst likely from the indices that I shared with you there, dumping in traditional markets, but it's still one of those things where Bitcoin it's highly susceptible to those kind of things. So you just kind of got to be aware of that. Either way, we're under 50 on the RSI here. We can see stochastic swinging down now, and money flow index is low. So we're generally when you see this rather, it's more likely to see the price action continue lower than go up. So I would not trust the fact that we've recovered by a small margin here with this current 1-hour candle. Let's take a look here at the hourly and just kind of see where we're at. This is where it's funny, like we can see the swift rejection there with the Ichimoku cloud. All the more reason why you always respect the cloud and wait for confirmation above it. Okay, so again, solid closure there at 65,200, and the price turns itself around. And if we look at a few other factors, we can see the conversion line and the baseline are intersecting. Lagging spans within the price action. There is no reason to take a long or a short position right now. Bitcoin is just a big mess right now, and the truth is we want to let it calm down and relax before you take any trades. Keep in mind too, Bitcoin dominance is shooting up pretty solid, which implies we're going to have some trouble with altcoins in the near future. Again, as we get closer to 60%, we've seen it before, alts have a tendency of just dumping really hard. So it's not really an altcoin market right now as far as longs are concerned. I would just say if you're going to favor anything, favor shorts for the moment. Maybe not right now because most altcoins are tentatively finding their double bottom or just a bottom in general, but it is advisable to not take long positions right now. If you're doing so, you just got to watch it close, right? Not to say it's wrong, it's just it doesn't make any sense in the larger time frames, right? So what I'll do is I'll clean up this chart here. Of course, I know it kind of seems jumbled. I got an overlay of 2 different fib levels for the macro and the micro. So if you're kind of curious as to why the charts look so funky right now, that's just kind of the reason for it. But I want to jump in here and get you guys a quick update, guys and gals, and I appreciate, again, all support and you watching there as well. But once more, as per usual, I'll post this on our Twitter, Telegram, and Discord and kind of give you perspective where we're at. And again, just kind of, they look a little something like this here, right? And this is last night when we evaluated. Looked all peachy, and then unfortunately didn't break that 65,200 mark. If we look at liquidation, still a ton of liquidation down here as low as 61 to 60,000. All right, folks. That's what we got. I hope you all have a good rest of your day. Thanks so much for your time. Be safe out there. We'll see you the next one. Have a great rest of your day. Take care.